Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Before getting into the video tonight, I want to remind you that this is the final video. There will not be daily videos next week, but there will be content that we're going to be releasing, some things that I've done in the background, some things that I've talked about in previous live streams and other types of things that will be packaged. So there will be some content. Make sure you follow me on Twitter. If there are big events, I'll do my best to keep some things going on there. I will actually be internet challenged in several days while I'm out of town. I just want to thank everyone again for an amazing year in spite of everything that we've all been through. So thank you again so much for watching the channel, being a subscriber. And if you haven't subscribed, make sure you do, so when we start up next year, you'll be full on ready to go. Let's go ahead and dig into tonight's video because there's a lot to cover. We have quadruple witching coming. We have the Tesla add to the S&P. We have rebalancing on the S&P. There's just a ton of activity that's going to be going on in the markets. Overnight, we're seeing some weakness in the futures. I'm not sure it's material, and we did see a new all-time high, and I will talk about that in the technical section here shortly. But as we come into today, there's really no material news, but yesterday's news was interesting because the claims number came in much higher than expected. They continue to expand. A lot of that has to do with the shutdowns that we're seeing across the country. Now, the continuing claims did the opposite. They downticked, and we actually got the lowest number we've had down at 5.5, just by a little bit. But it was a lower number, and I think a lot of that is just folks giving up on looking for jobs at the moment. It's not necessarily a bullish event. Everything continues to be about stimulus hopes. We saw the market rally. I was pretty sure in last night's video that we would see that 3712 number taken out. We did do that. We printed up to some of those numbers that I talked about. We're just continuing to operate on the expectations of the stimulus being passed. So what happens when it does get passed? Does it get passed today? I wouldn't be surprised if it doesn't happen until the weekend. Now, the other thing that I saw overnight I thought was interesting is the Moderna vaccine has been approved. So there's vaccine news out there, but futures don't seem to care, at least not at the moment. We'll see how when the cash comes in tomorrow. But I do want to remind you, if it does get crazy, I will light up the screen typically around 1:30 New York time. I'll let the markets trade for a while, maybe just a bit later than that tomorrow. We'll see how it goes. But I will be in the office tomorrow working, so I will definitely cover that. If anything crazy starts to happen, my expectations are this will be the last real week of the year. We've seen it continue to move into all-time new highs. It's likely that this upward trend will continue. There doesn't seem to be a sign of any major top. We'll see how we trade today and how we finish up. Today is Friday. We do run our models on Friday night for the intermediate, so be watching for that, and I will cover that activity when it comes out on Sunday night's video. So let's go ahead and take a look at the charts, see how this week's going to end, and see how we set up as we start to come into next week. As we take a quick glance at the WaveTech database, we did see basically a rotation, about 580 new buy signals versus about 480 sells. So just a basic rotation going on, nothing really to talk about there. But the key element will be how the intermediate models act tomorrow, as the current intermediate bullishness is at 73.42. It is likely with the stronger week again that we will see a further increase in this bullish percent. Now, last week was a rotation, so I'll be watching that very closely, and we'll discuss that in Sunday night's video. The first market I'm going to cover tonight is Bitcoin. Exactly 4 weeks ago, on November 17th, I did a video, Bitcoin to 23,000. Well, we have done just that. We had a high of 23,751. We've actually satisfied the upward sequence. However, there's a lot of momentum behind this, so we're likely to see a dragon head set up, which means that we'll see some high-level consolidation, maybe similar to this previous consolidation, and it does look like that the market wants to move high. Just looking at the weekly chart, you can see how extreme the action has been as we just sliced right through the top end of the market grid. And if we close up here, could signal that we're going to get some sideways movement, and this confirms what I just said when we were looking at the daily chart. But the momentum on this thing is just insane. We're looking at a 7.46 on PPM1, a 4.6 on PPM2, and PPM3 is at 4.10. So regardless of what happens here, this market has a substantial amount of upward momentum. The key level that you can keep an eye on is just a simple 10-week moving average over the next several weeks. That's going to be your key point. 16,818 will be the target on, is where it is right now, but it is jumping at almost 8% per week. So we're looking at about $1,200 per week. So that will put us at around 17,800 to 18,000. So you can see that the support is going to be coming up right underneath this market. So expect to see that 10-week moving average supply a substantial amount of support. As I cover the S&P, there's some interesting things going on. In spite of punching out an all-time new high yesterday, we're not seeing the futures actually confirm these higher prices. PPM1 is actually fading and turning down overnight. PPM2 has crossed over its first derivative, but PPM3 is also very flat. And this is a very strange configuration right now. And what it does suggest is that we're going to continue to climb slightly higher. As I've said many times over the past several videos, is that the 10-day moving average is going to be the key demand line. Currently 36.79. It's not rising very much anymore. It's basically flat, which tells us there is some vulnerability to go down and test this level. Whether it happens today, intraday, or whether it happens early next week, it does look like there's some vulnerability. And I believe after we have some of the news that is likely to come out, stimulus is out, the Moderna vaccine is out, all of this has been priced into the market. So it's going to be hard after all of this news is out to find something to continue to bid this market. The headwinds are starting to build substantially. I don't see a major top here, as I mentioned in the opening comments, but there is some vulnerability here, and it's based on what we're seeing here in the futures, and this is reflecting just a slight downtick. The futures were down about 12 handles. They're down 5.5 handles right now. So there's not any material movement right now, and with everything that's going to happen with Tesla being added into the S&P, the rebalancing, quadruple witching, there's a lot to digest today. So there's going to be a lot of movement. My expectations are from the futures is an S2 R1 is the likely range for today. I think if it were to expand in any direction, it could go down to a S3, which would be coming close to the test of that 10-day moving average. As we look at the SPX, it's obviously a very similar situation. PPM1 turned up yesterday, but based on the futures, this is going to turn back down, and PPM2 is likely to respond very similar to how the prices in the futures are acting. So we're going to see some potential on the upside, but just like in the futures, that demand line will be the 10-day moving average, 3686.35. That is going up very slightly. It's up at 0.15. It's probably going to fade just a little bit, but we're looking at about 6 handles per day. As we look at the market grid for the SPX today, My expectations would be for around a low of an S2 37.10, R1 37.28. Yesterday's high was 37.25. So if we do render a new high, we want to watch that action, just like I discussed in yesterday's video, how the market responds on a new high. Now, yesterday it did pull back after making a new high, but it came back and was able to close at the 37.22 level, which was well above that old high of 37.12. So, but this market is climbing that wall of worry, and there's enough underlying trend here to keep it moving higher. There is some vulnerability here to move back to at least that 10-period moving average, and I don't see it getting down as low as the 21. That would be mid 36 handle. That would be down to 36.51. It's certainly a possibility here. This whole configuration here is basically in what I call we're in the trend maintenance mode. I've talked about this a lot. We get the boost in momentum, and then the PPMs stay in a sideways mode. So we are setting up that type of tone, which tells us that this upward slope is likely to continue. So there's not any major high going to happen here. There's some slight vulnerability to the downside built into this configuration. The next market that I'll cover is the NASDAQ. We are seeing some slight downside overnight. We're down 23 handles right now. As we look at the market grid for today, my expectation is that we could see at least S2 possibility at 16,682. R1 S2 is the projected range for today based upon the configuration in the PPMs. So that suggests there would be a low of 12,682 and a high of 12,783. So far overnight, 12,754 and a low of 12,707. So we should see this range expanded. We see a very narrow range that's been climbing, and if you notice, just like with the S&P, we're seeing not a lot of momentum build here. We're starting to see it fade. With the slight downtick, we're seeing the PPMs turn down, and if we continue to see this thing move lower into the close tomorrow, then we're likely to see some follow-through early in the week. Now, I'm just hedging a little bit here because of all of the things that are going to happen today, but this technical picture looks somewhat concerning to me just on a short-term basis. The absolute extreme would be down to 12,382, which would be the 21-day moving average, but the 10-period moving average has been the primary demand line, is likely to continue to be at 12,557. So that would put us down around S3. So that could be printed, but expect plenty of volatility. I don't think it's going to be a lackluster day by any means. The next market that I'll cover is the Russell, and the Russell continues to climb substantially. We did see an all-time new high again yesterday. As we look at the market grid for tomorrow, it looks to me that we could have at least an R1, maybe an R2 level, which would be 1985 to 1992. It's possible to print 2000. We're so close to this. We're continuing to see that leadership that I've been talking about for a while. Yesterday, the Russell was up 1.3 with the NASDAQ only up 0.8. So that leadership is continuing to emerge that I've been talking about for a while. On the downside, probably an S1, 1971 will be the extreme. We look at the Russell versus the NASDAQ on the spread basis, you'll see that it continues to move higher in this pattern. There does not appear to be any type of configuration here that is suggesting this spread is anywhere from done. As I've talked about in a lot of detail, expect to see this leadership change continue throughout the next 2 to 3 quarters. The final market that I will cover is gold. Gold actually was able to extend substantially yesterday. I thought we would top out around the 1890 level. We continued to print higher. We printed a high yesterday of 1902 even. We fell back and closed at 1890, so we did end up closing around that level. That was at the 0.382 retracement. We're seeing, we did also get an RXT sell signal. We are seeing some weakness. We're down 370 right now. So the RXT sell signal would suggest we could come down toward S2, which is 1875. We've already printed an S1, 1883.40. The low has been 1883.60. This could be the low, but I suspect we'll see more downside. The Dow is actually making a slight turn to the positive. As I've been talking about for a while, gold is setting up a major bottoming pattern, and ultimately we should see around the 1930 level, and then there'll be substantial resistance. Just reviewing the weekly chart, we are seeing that the 10-week moving average, 1879, is resistance, but we're now trading above that. We're at 1886. Also, you'll see down below that the PPM1 is turning up, and this is the pattern I was talking about in the last couple of videos, is that the movement looks like we could go to the 21-week moving average, 1918, but there's definitely a major bottoming pattern setting up in gold. And that brings in some interesting thoughts as far as what the configuration is going to be on the Dow and some of these other markets that are interrelated. That will be something that we'll start to see set up early next year. This will complete tonight's video. Thank you again. We'll talk to you on Sunday night. Thanks for watching.